In the early 2000s, everything looked perfect. The economy was booming. Housing prices kept rising year after year. Banks were making record profits. And for most people, it felt like the system could never fail. Buying a house seemed like the safest investment anyone could make. But behind the scenes, something very dangerous was building. And almost no one noticed. Except one man. Michael Burry was not a typical investor. He didn't follow trends. He didn't trust the system blindly. Instead, he spent countless hours analyzing data, reading documents, looking for hidden risks that others ignored. And when he started studying the housing market, he found something alarming. Thousands of mortgages being given to people with very low income. Loans approved without proper checks. Borrowers who had no realistic way of paying back their debt. But that wasn't the worst part. Banks were taking these risky loans and turning them into complex financial products, then selling them to investors as safe and reliable. On the surface, everything looked stable. But underneath, the system was fragile. Very fragile. Burry realized that if enough people stopped paying their mortgages, the entire system could collapse. And he believed that moment was coming. Soon. So he made a bold decision. He would bet against the housing market. Something that almost nobody had ever done before. He went to major banks and proposed an unusual idea. He wanted a way to profit if the housing market failed. At first, banks didn't even understand what he was asking for. But eventually, they created a new financial tool just for him. Credit default swaps. This allowed him to bet against mortgage-backed securities. And he invested millions. But there was a problem. Nothing happened. Months went by. Then years. The housing market kept rising. Prices kept going up. And to everyone else, it looked like Burry was completely wrong. Investors in his fund started to panic. They didn't understand his strategy. Some demanded their money back. Others accused him of being reckless. The pressure kept building. But Burry didn't back down. He trusted his research. He knew what he had seen. And he was willing to wait. Then, slowly, things started to change. In 2007, mortgage defaults began to rise. At first, it was barely noticeable. But then it accelerated. More people stopped paying their loans. The cracks in the system were becoming visible. Banks started to feel the impact. Confidence began to drop. And then, in 2008, everything collapsed. Major financial institutions failed. Markets crashed around the world. Millions of people lost their homes. The global economy entered a deep crisis. And suddenly, what Burry had predicted was happening in real time. His position paid off. Massively, while most investors were losing billions. He was making money. Hundreds of millions of dollars. What everyone once thought was a crazy idea turned out to be one of the most accurate predictions in financial history.